In today's video, we're looking at some really simple but effective open scalping strategies so you can attack the market open in a really easy to understand way. Remember guys, we're not investment professionals, we're just trying to teach you what works for us specifically, and it might not work for you, so remember to trade at your own risk and trade responsibly. If you want to help support our completely free day trading content, make sure to hit the like button, hit the subscribe button below, and click the bell next to that to get an alert every time we day trade live on stream or drop a new video. Remember, if you want to join us for these live classes, make sure you join both of these Discords. Our very own Discord that has some really great traders talking about stocks early in the morning during the market days. Plus, check out Trader Mike's Discord, which is a really great group of talented, profitable penny stock traders. I'll include both of those links in the description for you to go check out. Now, with all of that said, let's take a look at these strategies. Okay, so yeah, today's lesson is on easy open scalping strategies, and I guess the whole point of this lesson was so that people could understand some simple open strategies. I know a lot of traders, attempt to trade the open, but it can just be a really volatile time that can ultimately just hurt traders. So the first thing you want to understand before we kind of look and delve deeper into these strategies is that, again, they're using half and whole dollars. Even if I'm not using these levels specifically for the break levels, I'm still using half and whole dollars as a risk area, as a reward target, as a really simple level that I can base different trades off of. And so like this says here, these are big psychological levels, and examples of half and whole dollars include $5, $5.50, $6.50, so forth and so on. And the general flow you'll see a stock do a lot of the time is it'll push above or below one of these levels, and then you ultimately look for it to hold as support or resistance there, and then continue on breaking previous highs and moving up or down in whichever way it was originally heading. But once you can grasp that simple movement pattern, scalping becomes a little bit easier to predict using these levels, and they're really simple and easy levels for beginners to understand that, again, you can base all your risk off of. You can use half and whole dollars as reward targets, break areas, so forth and so on. And I think a lot of traders are watching these levels, which make them really significant for momentum. Here's just an example of the whole dollar of 6, and it's kind of the same thing that I talked about. Let me see if it'll let me draw here. So again, this is the whole dollar of 6. You can see the stock kind of push above that level, come back down, hold that level as support right here, and then kind of continue pushing up. And that's the general flow. This is not always going to happen, though. You are going to see some rejections sometimes at these specific levels, and so you don't want to just kind of always bet that they're going to hold as support. But this is a very common thing that you'll see movement with certain stocks with momentum, is that you'll just see these type of levels happen where you have a level, it breaks, it ultimately pulls back and holds as support, and it's a very simple kind of flow of a stock that you'll see on an everyday basis. Okay, so another big common kind of theme that we're going to use for these different strategies is that we're going to be following the overall market's momentum. And this is an extremely profitable way to approach the open. A lot of the time I'm watching the SPY or the SPX, which is just the overall market. It's the largest companies in the market. And then I'm basing these strategies off of that momentum at the open. And so like this says, when scalping the open, I try to wait for momentum in the SPY or SPX's confirmation and then attack a specific move on a following stock. This could be incredibly profitable for scalping, as most stocks even follow the overall market. And so thus we get an accompanying move to take advantage of. Waiting for the SPY to break a high or low and then scalping the following move has shown to be very profitable at the open, especially when you're shorting specifically low of the day breaks within the first 10 minutes. It's one of my favorite kind of range strategies where you look for that range to form at the open and then kind of take advantage of that move to where you'll see a range formed, and then you're just going to look for that kind of low break or high break to happen. I think preferably I like low of the day breaks, just because I think a very common saying is that panic is a stronger emotion than hope, and ultimately puts forth stronger moves than hope does. But I think it works in both directions. But again, so let's go ahead and move on to the actual strategies here. And I think they're pretty easy to understand, and they're easy for beginners to kind of pick up and roll with once they kind of learn the kind of flow of these different strategies. Okay, so the first one we're looking at is AMD, and then we can look at the overall SPY itself. And this is something that you'll see me do a ton here, which is that I just look for momentum in the overall market, and then I try to scalp that momentum. So basically, if you guys can see the overall market, here's the SPY itself on this particular day. And you can see the SPY is forming a little bit of a range. What we can do is look for momentum in the SPY to take advantage of with AMD. And so if we press play here, we can wait. One of my favorite things to look for is when the SPY starts to break this low down here. Once the SPY breaks the low of the day, even if the stock isn't necessarily following it to the T on that specific day, it's usually going to cause at least some type of momentum move to take advantage of from that. And so we can see the SPY move here. And if we get that low at the day break, then we can short into AMD. And it's also where the half dollars kind of come into play here, because once we do this, we can use the half or whole dollars as reward targets, as risk levels, so we can keep our risk tight and understand where the big levels are. But essentially, we're just waiting for some momentum on the downside, on the short side, to happen for the overall SPY and the overall market. And so we can see the SPY here, it's moving. If we get a break under this 336.85 low of the day right here, then we're usually going to get a momentum, a following move in a stock like AMD or MU. And so what we can wait for is we can wait for the SPY to break this low and then short AMD or MU on the following move that we get from it. And so you can see as the SPY starts to break down here, we're going to wait for this low of the day break to happen. And usually it's going to cause a low of the day break to happen in AMD here. Not always, but usually we're going to see a following move from this big momentum break in the SPY. And so again, the specific level we're watching right here is 336.85, and we can press play and wait for that to actually happen and then take advantage of it. So let's wait for it. Alright, so as you guys can see here, the SPY recently broke that level. So we broke the low of the day. We got some momentum on the downside at the opening bell within the first 5 minutes of the day. A key here is that we formed this range. And this is really what you want to get into the hang of. If you can get into the hang of documenting these ranges that the overall SPY, or any stock for that matter, forms at the open, then the opening is going to be a lot easier to trade. It's going to be a lot easier to trade the open if you can identify the ranges and, thus those range breaks. And so we have this range here. We're finally getting the break on the downside. Again, it's breaking this 336.85 low at the day level. And when we get that, we can jump in short on this move and look for AMD. You can see as soon as that you can see as soon as the SPY breaks the low of the day, what do we get? We get an accompanying move here in AMD. And we can scalp it really, really quickly. Look for 78.50 here, and then get out at 78.50. And with 1,000 shares, take advantage of the overall market's momentum. And so I hope you guys can see how significant that low of the day break in the SPY in the overall market influenced a mid and high cap stock like AMD. And so we can wait for that type of low at the day break, or any type of range break for that matter, that has some momentum there in the overall market or in the SPY, and then we can look for that to influence other mid and high cap stocks. And so they're not going to follow it to the T, but you can see AMD doesn't necessarily look exactly like the SPY on this specific day, but just that low of the day break, that momentum, that big breakdown in the overall market influenced AMD enough to take advantage of it, to jump in and then use half or whole dollars as our guide kind of in those trades. And so that was the first example and the first strategy we're going to go over. Just a really simple opening range break strategy. Very simple, really easy to use. And again, the big key here that you want to understand is that you want to follow the market. You want to look for range breaks in the market specifically. And in this case, we had this break here. So you could see the range that was formed in the first 3-4 minutes. And then once we actually broke that range, again, it did influence a stock like AMD. And we did get a really nice breakdown that we could scalp in and out of using that strategy. Now, the next strategy is really simple as well. And this is a strategy that I've been trading for years. And I don't know really have a name for it. I just call it the level break dip buy. So this is basically a dip buy or a bounce buy if you're trading it short. You can use it in both directions. And like this says here, this strategy takes advantage of a very tight risk reward level. In this, you wait for a high or low of the day breakout, and then you enter the position on a pullback to the previous closing price or the previous high of the day, low of the day, anticipating the previous level holding. This allows you to keep your risk tight, as you can set the previous level as a risk point and look for a continuation. Now, I know that's probably really confusing sounding, but it's going to make a little bit more sense if we can go over actual examples of this. So basically you get this low at the daybreak. And once this low at the daybreak happens, instead of just jumping in at this low of the daybreak, number one of the big keys with this type of strategy is you want to look for a confirmed level breaking. Okay, so yeah, one of the keys here is you want to look for a confirmed level breaking. Here's one of the confirmations, here's another one. And so then when we finally get that breakdown, instead of just jumping in on this low of the daybreak right here, which I think a lot of traders jump in on low of the day breaks and high of the day breaks, and I'm not saying that they're not profitable to do so, but what I'm saying is that you're going to get faked out a ton with these. And I think a better way to approach kind of breakouts and breakdowns in general, and it doesn't necessarily have to be on the short side with this one, is to just wait for a pullback to the level instead. And so you actually get the level breakdown here. Instead of jumping in here on that actual breakdown, you can instead wait for a pullback to that level and jump in here on the little kind of dip bounce back to that level, the bounce back to that level. In that way, your risk is much smaller. You know, you could set your risk at either the confirmed level, maybe a level right above that, like you got a level here that had some confirmation. And so you can use this as a risk point and then look for that level to hold. And so this is the natural flow of a stock where you'll see these levels break, and then you'll see a kind of retest of that level, and then you'll see a confirmation and a continuation. Wrong button. There we go. You'll see the level break and then pull back and then continue. And this is a very common kind of flow of a stock's movement as well here. And it just gives you the key here with this one, and the benefit of this strategy is really that you're going to have a tighter risk reward. I'm using the previous closing price script that we do have here. And so when looking at this, we are using the previous closing price script. And so I'm going to add that to my chart here so I can see where the previous closing price is. And so again, here's a really interesting level where we're going to use here's a really interesting example that we're going to use everything we went over earlier in the PowerPoint, which is just half and whole dollars, pullbacks after breakouts, and then range breaks as well. So you can see AMD started to push up into the opening bell here. So we got this opening move. This light blue line right here is the previous closing price. And so this is a really big influential level for some of these stocks. So we have the previous closing price here. In this case, it's at 85.55. And so we got a really nice squeeze above the previous closing price. Now, to take advantage of this, once we get this level to actually break, there's a few levels that we can watch here. Number one is 85.50. Half dollar level that is close enough to this level that if we buy in, we can use it as a risk. Very tight risk level, and we can just look to get in on the dip. Now that we actually had this level break at the opening bell, the level broke, we can now wait for a pullback, giving ourselves a really tight risk level. And so we're going to press play here, and we're going to try to buy in on the pullback. We got the range break, we got the level break, and now we just want to pull back to take advantage of using this strategy. That way we can kind of set a level just underneath the big level break that we were watching as a risk, and then keep our risk very, very tight, which is one of the really benefits of this strategy, is that our risk reward ratio is really good. We have a really small risk area to take advantage of. Yeah, so we got the level break at the previous closing price. We're going to look for a dip. There's the dip. All right, so we just jumped in with 1,000 shares, and we can get in on this little dip area and then use a really tight risk level to take advantage of. And so in this case, we got a quick bounce. We can sell half of the position there to take advantage of it quickly. But you can see how much the stock respects the previous closing price. And so finding levels like this is key. You know, you can take advantage of these levels and just, you know, use them as a guide on where you enter the position, levels that you ultimately want to look to hold using technical analysis, giving yourself a tight risk in these trades. And so you can even see in this instance, this stock went down to the very cent of the previous closing price, down to the very cent. And so we can just get out the rest there because, again, this is a scalping strategy. We're not trying to marry the move. But again, look at all the benefits of this trade. We have a tight risk. If we enter the position at, I think we got into this one at 61, our risk is at 85.50 or 85.49. So our risk is literally 12 cents. We've got a tiny risk here, and we can look for the previous high of the day up here as a reward target. We can look for 86. And so we're getting in, we've got like 40 cents of reward, 12 cents of risk, a tiny risk relative to the reward, and a really easy trade that I think is probably going to be a high percentage strategy as well. Anyways, team, that's it for this video. Remember, if you want to join these live, join our Discord or Trader Mike's Discord, and I'll include those links in the description. If you want to help support our completely free content, you can check out Webull. If you sign up and deposit $100, you get a free stock. It's got free paper trading and zero commission stock and options trading, and I'll include that link in the description. Again, it's a great way to help support us. With all of that said, good luck in the markets, guys. We'll see you all next time. Have a good weekend and Labor Day, and I'll see you all then.